Brent. The steady grind, the supportive gamma flows. Give me the explanation for why this market's so resilient.
Big level, Oliver, that we mentioned this morning, I've been tracking is 65.05. That's the JP Morgan strike, and that strike expires at the end of the month. So if we get above that level or we're near that level, that should be a real stabilizer for equities, at least in the next week, and the big S&P expiration, and of course the FOMC, which is on the 17th. So that's only 4 trading sessions away. And what's interesting at this juncture is 2 things. Number one, Oracle just crushed it after hours. That stock's up 20%. So futures are getting a nice lift off of that. You mentioned Robinhood before and its inclusion in the S&P 500, so that stock is really doing well, getting quite a bit of inflows. Tomorrow we have PPI. The 0DT straddle or the 1DT straddle is pricing that as a total dud. It's basically about $20. So there's no real expectation of volatility around that number. But there is a bit of anxiety around the CPI number that's coming out on Thursday. And so that's kind of the last day or last kind of data point, I think, that can really trigger any kind of a small amount of volatility. But the bottom line here is there's a lot of gamma, vols getting sold, and that dynamic is unlikely to change until next Wednesday. And then next Wednesday, what happens is we have VIX expiration in the morning, then we have FOMC in the afternoon, and then 2 days after that, you have the biggest expiration probably that we've ever seen in history. So a lot of flows are going to shift around that date.
Okay. How come biggest ever in history, Brent? People just trading a ton lately. You mentioned last week, you had that great stat. We had our most 0DTE comprised session ever at like 70%, right?
That's right. Huge 0DT options, and right now that's dominating the marketplace. Why? Because people are waiting on rate cuts. They're waiting on the macro data, waiting on some of that stuff to clear up. And so the 0DT options are essentially kind of looking at a risk-free market at this moment, because what is going to change today, for example, or what is going to change tomorrow that's going to switch up the rate regime? Probably nothing. So a lot of 0DT flows are unlocked in that space, and we're seeing people kind of push into different themes. Google's been a real winner here out of the last few days. Avgo was a big winner, as NVIDIA mentioned, has been kind of contracting or coming in. AppLovin and Hood were recently added to the S&P 500 index. That's coming up in a couple of weeks. So those stocks are doing pretty well. We know it's big flows into financials today. So really big flows into Goldman, JP Morgan, and Morgan Stanley. So there is some asset kind of or stock rotation happening under the surface. But if there's one sign or one thing that I don't like, you can see here on the bottom left is where a lot of stocks are clustering.
Still.
So what's that? Yeah. So that's low volatility expectations. People are not betting on a ton of movement for these names over the next 30 days, but they are put heavy, meaning put prices are carrying a premium to calls. I think that's interesting given the fact that we're at all-time highs. In that we're getting 25 basis point rate cut almost guaranteed. And some people are even saying 50 is now obviously on the table. So you would think that the equity market would want to position a little more bullishly into an event like that. But there seems to be some trepidation there. And the stuff that is bullish is gold, which remains, pretty well bid. You can see there it's on the right. Some of the bond ETFs are starting to catch a little bit of a bid as well. So people are kind of positioning around this changing rate regime. So it's very strange. People are pricing in very low volatility over the next week at least. But they are not piling into calls here as we are at all-time highs. Now, Oracle, which just crushed it, maybe that changes the tech dynamic here a little bit over the next week or so. But, bottom line here is over the next week, not expecting a whole lot to happen until Wednesday. And then Wednesday, you get the rate shifts as well as a lot of position shifting. And to me, that's where the volatility will start to shift and stocks will really start making big moves.
And if it goes the way folks hope, then most of our flows supportive, I assume. I want to go back just real quick, Brent, into the trace. Take us through again what you envision could happen next week if all those dubs do align.
Yes, last week we were talking about the possibility of 1% to 2% upside in the market until the next week's FOMC, excuse me. And so we're right about up 1%. I think we could easily get into the 65-50 area because there's a bunch of positions in that general neighborhood. You can see how that map is bright blue above us, right? That bright blue is resistance. Not resistance as in like sell off, but resistance as in stuck in mud. We've been calling this the zombie market here, or the zombie period, where vol's just kind of grinding. Very tight range yesterday. We only had a 30 bips range yesterday. Today was a 50 bips range, meaning that the market is just not doing much, right? The S&P is just not doing much. And there's these big condor trades that are coming in and kind of trapping volatility. We saw that again today, huge 0DT condor flow. So these short dated flows are just keeping a straitjacket on this market. And all that's, I think, is just going to set to release next week. So right now we have 65.50 is, I think, squaring up to be, probably the key upside level. Maybe 6,600 if CPI is just really in line and people squeeze this a little bit more. But that's where things started getting really toppy in terms of the options positioning. So, maybe another 1% here over the next 4 days.
Perfect.